OSFI just came out with a new improved stress test to make it worse for people to buy. What does all of this mean? Stay tuned for this month's podcast of Prime Property Deal to find out exactly my thoughts and deep dive into what is happening on the market. Stay tuned. Promise you, it'll be worth it. Good day, Toronto. Welcome to another monthly podcast of Prime Property Deal podcast. So glad you could join me here today. In today's longer form of my content, I'm going to go through a couple things where I want to kind of put together a string of thought process to kind of create a picture for you to see how I'm perceiving what's happening in the market, right? So I'm going to go through and talk about a deeper dive into what's happening in the numbers and the stats in case you missed that from last week's episode. Then I'm going to talk about this new OSFI stress test rule that they're implementing on June 1st. That was announced literally, I think, last Thursday. And then I'm going to talk about what this market is looking like in the coming few months and how we're supposed to navigate it, right? So there's a lot of crazy things happening right now. And there's a couple things I want you to keep in mind while I'm talking about this, right? So the first one, there is an interest rate change in April 21st. I don't suspect anything, but there's a lot of looming talks about something may happen just because a lot of other things are happening right now. Then there's also the federal budget that's coming out April 19th. It spooked out some people because they think there's a new change that's coming. But this was also kind of, I don't know how to put it. Like some people are expecting something, some people aren't. In my perspective, I'm just like, whether something happens or not, doesn't really matter, right? So I'm going to take you through all of that today and try to cohesively put together my thought process for you. So I'm going to share my screen with anyone who's watching this on YouTube. And if you're listening on podcasts or any of the podcast kind of media devices, whatever, players, iPhones, whatever, right? Like I'm going to do my best to explain this so you don't have to, stop the car and like start watching this or anything, right? So in front of me on my screen right now, I'm just going to recap something because this is very, very important. I had a lot of good feedback from it from last month's podcast. So I just want to recap this. And the idea is, what is the value of money, right? I know some of you guys are really bored by this topic because it's like, hey, just give me the real estate stuff. But this is very important. And I won't go into too much detail, but the idea here is real estate prices going up or is the value of money going down, right? I talked about this last time and you can see here, I use gold because gold has always been known to kind of hold its value, right? So, the whole back in the day, an ounce of gold could get you a nice dinner and a suit. Same thing today, right? But you can see in this chart, there's this giant curve coming down over here where how much ounces of gold you need to be a millionaire, right? Because the value of money is coming down because being a millionaire, it just means you need dollars, currency, fiat. And when that becomes less valuable, it's easier to get more of it, right? There's this whole thing back in the days when interest rates were high, right? 10%, you saved $1 million, you get 10% interest on it, back in the early 2000s. And then you can live off of $100,000 a year annually, right? Now, if you have $1 million, you get 0.1%. I think I saw a promotion from RBC the other day for 0.5%. So that means the interest you're earning on $1 million now is $50,000. And you ask yourself, is that enough to live off of, right? So it's not our real estate prices going up, is the value of money coming down. Just really think about that, right? So if you look at this final chart here, the blue line is Vancouver single family detached. That's what SFH stands for. Red is single family detached in Toronto, and then purple is Calgary. You can see basically ever since 2016 or 2017 or so, the value of real estate has actually been going down compared to gold. So something to keep in mind. It's not that real estate prices are going, it's the value of money that's coming down. So now let's kind of talk about what happened at the OSFI, right? This is the Office of Financial Institutions, Superintendent, something, right? Like they're the guys who implement the stress test. And what they basically came down and cracked the hammer is there's look, when COVID was happening, we used to be testing the anyone who applied for a mortgage at 5.219%, right? So even if you were getting a mortgage rate of 1.5, they would have tested you and say, hey, look, this person making $100,000 should only be able to get a mortgage at an interest rate of 5.19. So that's what the stress test was. When it first came out in 2018, it reduced everyone's buying power about 20%. And we had a huge flock of people who were like, oh, snap, right? I'm going to not be able to buy anything. So when it happened in end of 2017, they made the announcement. And then it was effective January 1st, everyone flooded the market and tried to buy something. So there's a huge demand in November, December, up to the implementation date of 2018, January 1st. So what they did during COVID is oh, you know what? Canada government loosening credit, right? And this is going to be an underlying theme. What's the government doing for this housing kind of crisis we have? And we clearly have a housing crisis. So what they did is they reduced the stress test from 5.19 or something like that. Someone correct me if I'm wrong, but I'm pretty sure it's 5.19. Then they reduced it to 4.79, meaning that they increased the buying power by about like 5 to 6% at the time. So that allowed people to buy more. But what they basically did in last Thursday was they're like, hey, look, obviously the market's too hot and there's been a lot of people complaining, even though, Tiff Macklem was like, oh, this is not our problem. And also there's a lot of people, government officials out there right now saying, hey, look, this is a housing crisis. We need to do different things on it, right? So their solution to all of this is, hey, you know what? Let's just increase the stress test back to what it was before. So it increased 50 bips or basis points or 0.15%. And now it's at 5.29. Okay. So ultimately, what that means to you as the buyer / investor is if you have 20% down, which is like 80, 90% of the mortgages right now, right? You are now losing 4%. 4 to 5% is what my mortgage brokers are telling me of what you're able to buy come June 1st. So let me peel it back, take a step back. Is that going to make a difference to the market? Yes and no. Is it going to make a top level difference to people who are buying like in the $1.5 million price range? No. You know why? Because at the end of the day, that's like $60,000, $70,000. It may make a dent, but most of these people, they're not stretching to their limit to buy something because they have the income to go for more. It's just what they're comfortable with carrying a mortgage. Is it going to make a difference between the 1 million to 1.5? Yeah, it will, because it'll maybe knock them down a bit. So if they were pushing themselves at the limit, especially, if you're looking in a Toronto detached, you're at your limit, right? It may affect you, maybe. And that's not a really big cohort of people. What it does affect, I think, is going to be the first-time home buyers. So anyone who's like sub $1 million or even like sub 700, because now you've effectively lost like $50,000, $60,000 of your buying power. You know what that is? In Toronto, you may just lose a den. In Toronto, you may just lost a parking spot. Maybe instead of on the subway line, now you are like subway line adjacent by 10 minutes. So that's kind of the effect it's having. It's having on the kind of entry-level product for anyone who's trying to buy. And I think this is a really stupid idea, not because I'm trying to increase the kind of the market and kind of keep it going. What it actually does is now it's just like, hey guys, look, you are now going to have less buying power come June 1st. And exactly like what we saw in 2017, there's going to be a flood of people going at it, right? So instead of ultimately trying to fix the market by fixing the supply side, the government of Canada and all the like subsidiary kind of levels have always been trying to tackle the housing crisis by fixing the demand side, okay? This is a very important thing. You want to think about it. How do you fix housing crisis? Do you decrease demand or do you increase supply? And in the past, Canada has always decreased demand. And they've always tried that. They've never increased supply. Let me give you some examples. Stress test. What did that do? Okay, everyone can buy less. That decreases demand. Foreign buyer tax. Hey, foreigners, don't buy anything. Decreases demand. Amortization. Hey, look, you know what? You can amortize from 40 years to 35 years. It means people can't afford as much. Decreases demand. They don't do anything to fix supply. And here's what I would say if they don't fix supply, right? It's ultimately always going to be causing a ripple effect of not enough stuff to buy. So that's why prices go up. It's very simple economics, supply and demand, right? It always comes back to that. And then when you mix in, oh, we're going to throw in 400,000 immigrants coming in every single year, increases demand. Doesn't fix it, right? If you are really, really trying to increase supply, how about, look, cities, allow us to have these legal secondary units. Make it easier for us to actually build more housing as private investors, right? Maybe don't put so much red tape and saying, oh, you need a minimum kind of size in here and, certain like ridiculous things about like kind of like staircase and ceiling height so that actually becomes legal. How about make that easier for us? Or how about instead of just building, large single family homes and then like giant condos, right? For single people or families, how about that thing missing in the middle? How about allow us to turn some of these bigger lots into like larger properties, right? So maybe these giant detaches, right? Turn them into 4 units, allow us to build on them, right? There's all this like NIMBYism going on, like, oh, not in my backyard. Oh, you can't increase density here. So this is what I mean. Like the government never increase or does anything to increase supply. I think with the exception of the MZOs, which is the municipal zoning things that everyone hates right now because Ford is saying, hey, you got to build stuff here, but no one wants to build in their backyard. So there's this huge kind of like dichotomy of hey, I want prices to come down, and the government's trying to taper off the demand. But in reality, all they do is try to reduce demand and it fails. But what they should do is increase supply. Look, I get we need to protect the green belt and everything, and then there's a yellow belt and everything. But there are different ways where we can increase supply, right? Like I was saying earlier, just allow us to increase the density of certain projects, right? Maybe instead of building a whole bunch of single family detaches, which everyone wants, I get it, it's really expensive, right? But how about just build more stacked town homes, right? Or more row homes is back on back, right? How about remove some red tape so that people can put shovel to the ground without taking 3 years of planning and all this debating, right? So this is what I mean. You really have to think about what the government's doing. Are they decreasing demand or are they increasing supply? So with the OSFI test, they're basically trying to decrease demand. And ultimately, look, I'll be very transparent. Who is this going to affect? The end users, the people who aren't in the market. I'll give you my personal opinion. Does reducing my buying power by 5% as an investor affect me? No, it does not affect me at all. You know why? Because I'm in the market and I can just move laterally if I want to change my house or buy another investment property. But you know who it really affects? The people who have been saving really, really hard, trying to get in the market, and now they're basically being completely wiped out because they're like, oh man, the goalpost got moved on me again. Because every time the goalpost gets moved on how you can buy a property, who it affects the most is the people who aren't in the real estate market. They don't own anything and they're aspiring to get some. And I can totally empathize with people who are maybe younger or even my age who had never had the opportunity to get into the market, right? Because the prices have outpaced them. I've worked with clients who are making hundreds of thousands of dollars between a couple, and it just doesn't make sense. They can't even save for the down payment fast enough, or they're just getting outpaced so quickly. And it has nothing to do with how hard they work, right? Yes, there's a part of it, right? But at the same time, you got to remember, way back in the day, you could make $40,000, $50,000 and buy a house. Now you make $40,000, $50,000, you can barely afford $250,000. That's like a condo in Oshawa. That's a bachelor's, right? Think about it. The goalpost keeps getting changed. And then later in this podcast, I'm going to talk about some certain things that kind of governments are doing. So when we move the goalpost. So when we talk about how this demand side just keeps getting plummeted lower and lower, this is why people get upset and frustrated, because when the governments come in, they reduce the buying power. And then at the same time, when there's so much inflation happening in the world, meaning that all the money we're making becomes worth less and less, and real estate prices look like they're going down, it kind of ultimately screws over the people who aren't in the market, which, for lack of a better term, are just like the Gen Zs and the millennials, right? It's the boomers who are sitting on real estate, which is their retirement, that they're going to benefit from. So that's kind of why there's this giant wealth gap. Those who have just bought something before and they're sitting on it, they're like, yeah, I want to see my real estate prices go up, but it's just unfair to people who can't get in the real estate market because, again, they're not allowing more supply to be built, but at the same time, they're reducing the ability for you to buy something and moving the goalpost so you can't even get in, right? So that's kind of like the frustration that's happening. And it really, really is a joke. And I'll show you, right? I'm going to share my screen again here. So where I'm from, or where my family is from, they're in Hong Kong, right? Where am I going? Oh, here we go. Yeah. Okay. So where my family's from is in Hong Kong. So Hong Kong is known to have some of the most expensive real estate, right? So there are rules, if the government really wanted to, that they could do to kind of curb demand for, say, investors, right? You could completely stop it. And how Hong Kong does it is, if you, for anyone listening on podcasts, you won't see this, but what they do is they increase down payment for people who don't own anything, right? They make it harder for you to buy, not easier for people who own assets, right? And this is what our Canadian government is doing. So in Hong Kong, you can see here anything under 10 million Hong Kong dollars. That's like 1.6 million Canadian dollars, right? And they're showing you what the maximum loan to value ratio is. So I'm not going to get too on there with you, but I'm just to simple this down for you, okay? So if a loan to value is 60%, it means that they need 40% down. Conventionally in Canada right now, our loan to value is 80% because you do 20% down. If you have insured mortgages, it's less than 20% down. You're like over 80% loan to value. So that's what loan to value is. So right now you can see if it's self-use property, meaning that you are going to live in it, end user, you're not an investor and you live in Hong Kong, the maximum loan to value they give you is 60%. That means to buy anything in Hong Kong, you need 40% down. By my math, that's 400,000 Canadian dollars to buy something in Hong Kong, right? So it's very hard to get into the Hong Kong market, right? That's why it's generational real estate. But at the same time, it's even harder for investors to get in, right? So if you are not in the Hong Kong kind of a resident, you need 50% down payment. But if you look at anyone who's owned more than one property, right, now you're going to need 50% minimum, even if you're in Hong Kong, so that it increased the down payment. That's an extra $100,000 you have to save. If you're outside of Hong Kong, again, which is what we also could do, they make it so you need 60% down payment. And then if you're doing this as a rental property, right, you're now looking at 80% at the max amount. So you're not in Hong Kong and you also are buying this for investment. You need 80% down payment. I can't do the math right now. Like that's like over $1 million just to buy an investment property from non-Hong Kong. And even if you live in Hong Kong, you need 70% down payment to buy an investment property. Do you think that's going to curb investor demand and prevent them from buying stuff? Absolutely. Are there still going to be really, really wealthy people who can buy real estate? Absolutely. But is it going to make it easier for the middle class to buy real estate because there's not a lot of other people with more money outbidding them? Yes. Right? So if we think about what the government is doing right now, are they, doing this kind of 5% stress test as, a political move to say, hey, look, we're trying to do something, or are they really wanting to do something, or they're not, right? Because to me, like this is kind of the real estate game and the money game that we've been told, and it's not fair to a lot of people. Like I understand how the rules work, and I'm trying to explain how the rules work for you, right? Like there's this thing my buddy used to in high school say, like, don't hate the player, hate the game. You need to understand the game that the government has put on us, and you need to understand the money game, because without understanding it, you don't know how to get out like on top financially, or you're going to just be kind of buried alive in all this ridiculousness that's happening, right? So that's why I'm kind of explaining to this. Like, if the government really wanted to do something, they easily could. There's so many rules that could prevent, reduce the demand and not kind of crush those at the bottom who are first-time home buyers. Like, even as an investor, like, look, just increase down payment for investors to like 50%. It's going to reduce the investors by a ton, right? A ton. But why aren't they doing it? Because investors, when they buy, sell, land transfer tax. When they sell, capital gains. That's revenue, right? The Canadian government just hasn't had a good opportunity to balance that. And I'm also going to talk later about foreign investment and what like the liberal governments have done, because there's just been some crazy interviews that happened last week as well. So that's what I'm talking about. Like, is our government increasing supply or decreasing demand? Because either one of those two is going to be how you fix the housing crisis. And to me, all they do is tackle the demand side in a very, very lame, stupid way. That's all I can say. Right. So I'm going to move on to kind of talk about like a little bit deep dive of what's happening in the market. But remember, keep in mind, what is the value of money? Is that going down, or is real estate prices going up? And what is our government doing with the demand and the supply, right? With all these rules changes. So when we kind of take a deeper dive into what happened in last month's numbers, we've never, ever had 15,000 sales. Think about that. The closest we ever came was May 2016, where we had 12,700. So last month, we broke the record amount of sales. Now, if you think about it, in order to have that many sales, you need to have that many properties. So we also had a record amount of listings, and we had 22,000 listings. This is the second highest ever amount of new listings ever. So last month, this is what happened. Second most amount of new listings ever, first most amount of sales ever. So why are there so many listings? Well, I can say, speaking to some people, they're like, hey, this is at the peak of the market. I'm going to cash out and, live mortgage free, whatever, right? I've talked about it before. I don't think it's a good idea, but whatever, right? So a lot of people listed, and the crazy thing is there was still enough demand to absorb all of it, right? So when we look at the numbers again, that's why our months of inventory was very low, 0.6. That means in 3 weeks, if nothing comes out, there's nothing to buy. So it's still a very, very tight market. It's not as crazy as it was in February, where people were just throwing money at it, because we have more options now, right? We had a lot more options compared to last month. But when you look at the crazy amount of second most ever listings, right? And then we absorbed all of it, it tells me that the demand side right now is still very high. So the stress test, what it's doing is going to curb down the demand side. And then we have to basically pray that we have the same amount of listings, this month. And here's a second kind of interesting thing. The first month that ever had so much listings was 25,000 instead of, which is 3,000 over the amount we got last month, which is 22,000. And that was May 2017. 2017, I think. Yeah, May 2017, which was right after they announced the foreign buyer tax, and everybody freaked out, and the market and all the inventory came out, right? So it took some time for that to absorb, almost like half a year to a year before the 905 freehold kind of started to like trend the other way. So when you have the stress test coming in, like I was saying, you just reduce the demand, but in the interim, because you set it for like 60 days, and I get why they do 60 days, right? Because they want to do it so that if there's any deals kind of in the process, they're not going to kibosh, because the rules change on them. But what do you think that's going to do between now and June 1st? It's going to be a mad dash to try to buy something and close before June so that they fall under the old stress test. And again, this is going to be people who are going to be maybe losing a den or losing a parking spot or losing the accessibility of where the condo is, right? At the end users for the first-time home buyers. They're going to get affected by the most by this new stress test. So again, is this a smart move? No, because they're reducing demand for people who are affected the most and that need to get into the market. But what they're doing is like, oh no, look, good luck. You have 2 months, and it's going to increase demand for the next 2 months. So I'm curious to see what's going to happen in April, because it's it's getting like really ridiculous, right? Like, there's a really good chart here by Scott Ingram, and I follow some of his stuff for charts because he has this good metric where it says like share of sold over asking, right? Like this metric, I personally think it's a vanity metric, and I think it's kind of stupid and silly. But when you look at it, the psychology behind it is the more properties that are sold over asking, it means that there is more buyer demand, which means that the sellers are more confident in soliciting multiple offers, right? Because in a really, really hot market, like say the 4 and 6 detaches, like honestly, you could like put that thing up for $1 and then it will sell. It doesn't really matter. So like the percentage amount you've sold over asking, whether it's 100%, 102%, 120%, 200%, it doesn't matter. It's just marketing gimmick, because the realtor is like, hey, look, I sold this for X amount, right? Because if I list the house for $1 and I sell it for $5, I'm like, look, 400% over asking. Stupid metric, right? But the amount that has sold over asking is a good metric to show how much confidence the seller has and how much buyer demand there is, because in order for you to sell over asking, that means that they have to position it for multiple offers, and there are multiple offers, right? So when you look at the condos right now, you're at half of the condos were sold over asking, whereas only 20% of them were sold over asking in February. And this is what I was talking about. Like the condos are making a tear. They're like going on a rampage right now, because a lot of people with the price increase in the 4 and 6 freehold or even 905 freehold have been priced out, right? So when you look at the 416 kind of like percentage sold over asking, you can see it's been like 50%. And then like it was crazy like in February, which was 70% almost. Now we're going over 7. But it's kind of tapering off, right? We're kind of accustomed to this because the freehold market has been kind of like crazy since like the start of COVID, because everyone wants more space. But now you can see the condo market coming back. So when I talk about this whole stress test thing and what's happening right now, and the sold percentage going over, you can tell that right now there's going to be a push before the stress test kicks in on the condo side. So this is what I was saying even before like, that stress test came in. Like I think the condos are going to go on tear, and anyone who's a first-time home buyer should definitely buy something before June happens. And I didn't even make up the June number before the stress test. I was like, just the way things are trending, I think June is going to be like, we're going to be highest average price ever, like breaking 722,000, right? And then when they just announced the June thing, they're like, oh, cool, look, Zen, I'm going to make you look really smart. And I'm going to be like, all right, I'm going to concur with you, right? Like I didn't make this up. They just kind of like slapped it on. That's what I'm saying. Condos are going to go up in price, and you really have to watch out. And another interesting thing that came out is like, if anyone who's kind of following the economy, there's a gentleman by Benjamin Tal. He's the head economist at CIBC, right? He went on an interview and have it blown in front of me. He's talking about how a lot of people are okay with cash flow negative, right? So for anyone who's not an investor, cash flow negative just means that your rent income doesn't cover all, like your mortgage expense, your interest, maintenance fees, and taxes, and all the stuff that you need to operate it, right? So he's saying right now that there are more than 50% who are cash flow negative, which is absolutely true, because right now the rents are low in downtown, and we haven't been able to buy a place in cash flow positive since like 2015, right? Despite how crazy rents were going, because prices kind of escalated the same round. So like the gap even for a good condo rent is like minus $400-500. And Benjamin Tal here is saying, you know what? There's a lot of people who are actually buying this despite the negative cash flow, and they're okay with that. He actually even says it's a good idea because he's expecting the prices to go up. So when you have economists coming out who are supposed to be kind of a little bit more bearish, thinking the real estate market is going to plummet down, right? And I know Benjamin Tal is kind of a bit more like bullish, but he's somewhat neutral, and he's saying that cash flow negative is okay. it's just going to put in the mindset of a lot of buyers who aren't like sophisticated that, hey, you know what? Should I be buying cash flow negative properties because it's going to go up in price? That's speculating, right? Like you don't have a proper plan, but people are okay with that because you know why? People don't believe the value of money is going to hold, right? So is the value of money going down or real estate prices going up? So if your money is sitting in the bank doing nothing, and this is why I say like investors are okay with it, they understand inflation and what's happening. Like in the perfect world, the money should be deflation so that savings make sense. But we're not in that kind of perfect world. So that means when people can't like leave money in the bank because they don't think it's going to be worth as much like, you know, in a year or two, they have to put into something that is going to at least hold its value or go up in value. So that's why it's kind of risky. They're willing to kind of risk it because they're like, well, I know inflation's happening and I'm going to lose my money anyways. I might as well put in something that is considered a good asset. It's going to hold its value, which is real estate. So that's why even if people are feeding $400 or $500 into a negative condo right now where it's negative, they're still willing to do it. And this is kind of what I'm saying. Is the demand coming down or supply going up? Which way? And what is the government doing with the value of money and what they're doing to kind of fix some of this? And they're all doing all the wrong things in my mind, right? They're promoting negative cash flows. Okay. They know inflation is killing the money, but they're still printing more money. And at the same time, they're trying to help out for some home buyers with kind of getting into the market, but they're not able to because look, Benjamin Tal just came and said, hey, you know what? It's okay to be cash flow negative on the entry level condos because that's where the first time home buyers are getting their stuff. So this is like a giant log jam that's going into the entry level condos right now. And that's what I'm saying. Prices can go up. So if you're trying to figure out what the heck is going to happen in the next few months and whether you should buy into something, I'll leave a link here to book a strategy call with me, which is www.chowzen.com, to show you that like, there's some pockets that still make sense for the $500,000-$600,000 price point, especially for those who are first time home buyers, right? But again, like, I'm not trying to like sell you something. I'm just like, look, if you want to get into the real estate market, these are all the things that I'm seeing right now, and they are ultimately going to affect what you're able to buy. Don't hate the player, hate the game. And the game that the government is providing to us, right? It's just a really, really crappy one for a lack of a better term, right? And then I'm going to move on to this next topic, right? Which is about, financial literacy. And I think this article is stupid, but I just want to point it out to kind of showcase kind of what the thought process is, right? So, there's a fiscal financialist where he's saying you shouldn't be spending 4 times what your gross income on what you're buying, right? Look, that's a dead dream right now in Toronto. So when we go through this whole chart, it's just to show you how much a value of real estate is relative to the income. And I've done this before, but I think they did some pretty good work on pulling this up. So in this chart here, it talks about Canada, right? Canada right now is a little bit over 7 times income. So this is all of Canada. So for anyone who's a Torontonian and you think, the whole world circles around you, there's other cities out there, like Hamilton, Oshawa, Calgary, Moncton, Vancouver is out there. This is all of Canada. So all of Canada with the craziness of like Toronto and Vancouver pulling the income averages up, we're at all-time 7x, which is crazy high, I frankly think this is higher because when I was going through this number, I think they are using average household income, whereas I just use an average single person's income. So as a single person, if you're looking at this, it's not 7 times your income, it's 7 times a couple's income. So if you're a single looking to buy a place, it's 14 times your income, right, in Canada. So just keep that in mind. Now, when we go to the Greater Vancouver area, they are at, looks like 11 times their income, which is crazy. But a single person, 22 times income. Then when we look at the Greater Toronto area, it's at 10 times income, and really a single person, 20 times income. And the reason why I know this? Because I track this metric as well. And I've had it here before. I haven't filled in the 2021 one right now. But based on average income, the average price right now in 2020 was almost 18 times the average income, right? So if you're 10 times in Toronto, divide by 2, household income, that's where you're coming from. So if you have the aspiration to basically buy anything, your average income is like 50 and you have to go into the $1 million price point. Stupid. It makes no sense, right? Even with this new stress test, you need about 4.5 times your mortgage is how much you can qualify for. So to buy the average place, you need to make $200,000 in Toronto solo. But if you're in a couple, 200 grand as a couple, okay. So this is where the metric from. It's crazy. And the reason why I'm showing you all this is, again, Toronto people, this is not an isolated thing. Ontarians? Yeah, this is not an isolated thing. I'm seeing this everywhere across Canada, and I'm going to talk about US later. Like this whole money thing, because the world has printed like, I think triple, like $100 trillion like altogether in money since the pandemic, is why values of assets are going up. It's like the thing I was talking about. You have 10 apples, $10. Each apple is $1. But if you now have $20 and 10 apples, the apples are $2 now. This is why stuff goes on price. Like lumber's gone up, concrete's gone up. Anyways, I'm not going off that tangent, right? So there's Greater Ontario. Then you go look at Ottawa. Ottawa has spiked like crazy. They're at 6.5 times the income. You got Montreal, 6 times income that spiked up. Moncton, bet you some of you guys don't even know where Moncton is. It's been crazy there, and prices are now almost 4 times, right? I know a lot of investors who have gone out there for cash flow. So this is what I'm talking about. Like prices are going up. You can see your Calgary always fluctuates because of the oil boom, right? So they had a huge boom in like 2014, and now they came down and they're going back up again, right? So you have to look at this from a holistic thing. Torontonians, it's not just Toronto, it's just all of the world. Now, there was this good RBC housing affordability measure, and they used a median household income. And I like using this metric a little bit more because a median just means that, like, for the stats nerds out there, it's in the middle, right? So what is the average affordability if you take the middle income? So averages, if you have some people who make way too much money, it skews the averages higher. If you have averages that are lower, right, anyone who makes no money, it skews it lower. So when you take the middle number, like right in the middle, whether the middle is like, 70,000 or 80,000, it takes that. So you can see here, a lot of families are using now more than 50% of their income to buy a home in the median income. And you can tell the average is skewed a little bit higher. So when you look at a lot of this, like this whole, it should be 4 times what your income to service is, it's stupid. It doesn't make any sense. Like, although I want it to make sense, it doesn't. And this is why I'm saying, is the value of real estate going up or is the value of money going down, right? And then when you don't when you don't increase supply and all you do is try to curb demand, prices also increase up. So there's a lot of factors coming at play. And that's why I'm going to try to paint that whole picture for you right now and why, quote unquote, prices are going up. There are lots of underlying reasons for that. And it's not just like one whole thing. You can pick it at whichever one you want. But when you combine all of them, all things are pointing that way right now. Right. And then when we look at the US market, so US is great because they actually track their metrics much better than Canada. You can see the yellow bar here, February 2020, is the pandemic. They had 1 million active listings in like all of US. So million's a lot, right? But you can see, look, pandemic lowering. Now we're at March 2021. We have 500,000 listings. That means from the start of pandemic to right now, the listings have been halved, meaning either people aren't selling or that many people are buying. Take it away, whichever way you want. When there's less stuff to buy, what's going to happen? Prices go up. And this is in US, not in Canada. So like if you ever actually like Google like crazy offer bids, I think I even watched a video somewhere in like Washington, like a beat up house like in far away from the DMZ area had 66 offers. Sound like a Toronto headline? Yeah. See, that's what I'm saying. It's not isolated into just Canada or Toronto. It's kind of all over the world. So think about that. Now, there was this very cool chart that someone made. I don't know who, like Eagle, like anyone who's listening, I'm sorry, you won't be able to watch this, but it's basically a chart of kind of how much prices have gone up since 2000, right? So you can see Canada is kind of gone up in a percentage, and then they're jumping, and then this is 2008 when there was the Great Recession, so US kind of lagged behind, right? But Canada, even especially Toronto, like we just had a little minor blip, and then it kept going and going. And this is why like a lot of people are saying Canada is very, very unaffordable when it comes to housing, right? Because again, let me point to you, is the value of money going down or is real estate prices going up? And I think value of money is going down. And this is globally. That's why you see a lot of prices on this chart here, France, Canada, UK, Spain, Italy, and Germany's negative right now. But the prices of real estate is going up because the asset is harder to get and money is easier to get. And then when you mix in our crazy government policies, which are trying to drive up real estate prices because they think it's good for the economy or all this other stuff I'm going to get into later, this is why I think Canada prices are going to go up because it's the game that they're making us play. So now we're going to go into, I think like 2016 is 2017 is like peak investor, like foreign money coming in. And you can see Canada is the first one to double its value since 2000. And all it took was 15 years. That's crazy. That is crazy. And then we go on an absolute tear from there, basically. And it just smokes everybody else. And we have a little bit of a pause in 2018 because of the stress test and the foreign money coming in. And then we're going to blow right past that because of the pandemic, right? So Right now, we are like 70% higher than the next one, which is UK, in terms of how fast prices have gone up. And this is why I'm saying, like, when you look at value of money and what the government is doing, they're clearly trying to drive up real estate prices for whatever reason I'm going to get into later. Then you also have the household mortgage. You can see right here that the amount of household debt due to mortgage has increased 7.1% from January 2020. Think about that. Like, let's just roll out the first 2 months before the pandemic, right? January, February. Ever since the pandemic, we have put 7% more mortgage into it. So is the actual ability to get mortgages harder or easier? Or is that much more people flocking into the real estate market, right? Like, if they really, really, really wanted to kind of like curb demand properly, maybe just do some other like actual sizable things to prevent people from buying, right? Instead of just like bumping up the stress test by like a couple points, right? This is what I'm saying. Like, what the government says and what they're thinking they're trying to do is totally opposite from at the actual effect. I swear, like the person who's like in power, I don't think they mean poorly or they don't mean well. It's just there's so many things going on, and maybe they're just not looking at the long-term picture. Because in my mind, I think a lot of politicians go into politics because they have good intentions, but sometimes they just don't see the entire thing, and the good intentions lead to a poor decision because they want to keep getting elected, right? So they got to kind of focus on the short-term goal. Anyways, I'm not going to get into the politics. But there's another interview here, Stephen Poloz, who used to be the head of Bank of Canada. And you can see right now, like, he looks at kind of the whole economy of Canada, right? And this is what Tiff Macklem, the current head, has been talking about. Real estate, because you guys are, and we're listening, is probably heavy into real estate. But if you think about it, the amount of transactions that happen in real estate, it's really not that high relative to the population, right? I think someone did the math. It was like 2 or 3% in a year, like the population actually turn over and transact in real estate. So for like the other 97, 98%, like, you know, real estate's not a thing. So that's why when Stephen Poloz in an interview, right, and remember, he was the Bank of Canada governor before, he's saying that reducing interest rate is how they're going to keep the economy going. And a hot housing market is a side effect, and he'll take one every day. Again, what is the government telling us? He's saying that in order to keep the economy going, a side effect is a hot housing market. Is it right or wrong? But he doesn't care, because if the 3% are affected, the other 97% are not. And he'll take that every day because, you know, like, if you kind of like this whole superhero thing, like, do you want to save the one person or save 100 people? And they're just obviously focusing on saving 100 people because there's only so much time. So that one person gets screwed over. And that one person, in my analogy right now, is anyone who's kind of looking to get into the real estate market. So that's one of the things that government had saying. Then you look at another article that came out. So Tiff Macklem, again, head of the government, where I have this here. So he says it right here. He says, from the perspective, monetary policy is a blunt tool, meaning it hits everything. It's a macroeconomic instrument. We have to take a look at the whole economy. The whole economy needs monetary policy to support the recovery, meaning keeping interest rates low. That's kind of the jargon that he's talking about. And then to get people back on track to work and get inflation back on target. Look, I've talked about inflation before. I know Canada, if you go on their site right now, they think inflation is at like 1.25%, whatever, and they need to hit it too. I think this is a whole bunch of baloney, because we can see inflation is through the roof, and inflation is just too much money that's being printed, and the Bank of Canada is printing money like all day crazy. So hiding behind the fact that we are going to continue keeping interest rates low to support the economy because inflation is quote unquote low, I think is a bunch of baloney, right? If inflation was low, we wouldn't see lumber, concrete, all the stuff to build houses increase in price. My haircut's gone up in price. My food has gone up in price, right? There's no way it's 1%. It's not a thing. But they're hiding behind it, and if they're keeping interest rates low, what's that going to do? It's going to make getting access to mortgages and much cheaper, right? Like, it may be harder to get it because of the stress test, but when you actually get it, it's at 1.5%. Money's free. It's basically free right now, right? Like, the interest rate is lower than inflation, despite what, you know, Tiff Macklem is saying, that the inflation is, you know, needs to be quote unquote back on target. We're way over target, dude. So this is what I'm telling you about, and why I always talk about this. What are all these signs showing us? Demand, they're trying to curb demand. That's all they're doing. What's the value of money? Is it going up or is it going down? What is the relative to real estate prices, right? And then when you look at the government talking about all this stuff like, hey, hot housing market is a side effect of blowing up the economy, right? When I would keep the economy going any day of the week. Oh, look, inflation is actually very, very low. Maybe we'll continue printing money to inflate it away some more. This is basically what they are doing, right? So when you mix demand, supply, value of money, value of real estate with what the government's doing, what do you think is going to happen to real estate prices? This is all the data I see all the time, and I wanted to put it together for you guys to actually kind of see what I'm seeing, right? It's crazy. It's not that I'm all overly bullish on the real estate. And yes, I am, right? But like, don't hate the player, hate the game. Like, this is the game the government has put in front of us. What are you going to do about it, right? Just like, no words, right? Like, if they really wanted to do something, they could, but they clearly aren't, right? And the other thing that's going to be crazy, I'm not going to play this video, but if anyone ever wants to watch this, I'll put a link in the description below, but with the agenda, but with this guy interviewing Adam Vaughn, who's the head of like housing something in the Liberal government, right? And he basically came out halfway through the interview, I think at like the 10-minute mark, and he was like, hey, you know what? The Canadian housing market has not been great for local buyers, but it's been great for investors, foreign investors. I'm like, the frick? Right? So he's saying, hey, look, it's a safe haven for money to come in. So whose side is he on, right? Like, this kind of just blows my mind, right? Like, how much money is actually flowing? Like, I know for a fact in 2016, 2017, I've had clients that foreign money was coming in, right? But if they really are trying to peg the problem at foreign investment right now, all of a sudden to say, hey, we're going to make some measures, do a political move. I don't know if that's his intention, but the fact that he said that tells me that before some of the stuff that happened in maybe the last 2-3 years, the intention was to get foreign money to come in. And while I do agree that foreign money coming in via immigration makes a lot of sense, right? But to have kind of like foreign investors park their money here makes no sense. It's terrible. So I don't know what his intention are. Maybe he said the wrong words. Again, that's what I'm saying. Like, maybe he has the good intentions, but it just came off wrong. But if you guys want to watch the video, like, it just blows my mind, like what the our government is doing. So that's why I'm saying, like, I have to evaluate everything that the government is saying, because sometimes I think they're talking out of both sides, right? Both mouths. So I don't know what makes sense. But when I see the things that they're doing and I think critically about what's happening, I can see that the real estate market is going to go up in price. And even if they drop a bomb on us and say like April 19th with the federal budget, I'm used to it already, because in the last few years, there's always been a drone bomb every year or two. So I'm expecting something. Is something going to happen? I have no idea. Is something going to happen? Possibly, maybe not. I don't know. It doesn't matter. But I know at the end of the day, all the moves that the governments have made in the last like 10 plus years have always been fixing the demand side and trying to cap it. And it's always affected the people who are at the bottom trying to get into the real estate market, never the people at the top. That's just how it's always been. And I see the pattern for the last 10 years. So then when they continue printing money the way that they're doing still, what is happening to real estate prices? That's what I want to portray to you, right? And kind of paint a picture for you, because I see all of this. I hope you do too. And I'm not saying you need to buy real estate. Like, and if you do, I'll put a link on the screen right now, www.chatzen, if you want to book a strategy call. But you just need to put your money into something that makes more sense. Because if money is being printed, even if you don't like real estate, stocks are going up because they're not allowing people to get into the market. And when more and more money comes in from different places, the way that the government's doing, all we're going to see is asset prices going up. This is why we're in a ginormous asset bubble. Cash is trash. Do something with it. I really hope this kind of podcast long form gives you a little bit idea of what I'm thinking and why I think the way I do. Like, for me, I want to provide enough information for you guys to make the proper decision. Like, real estate's not right for everyone. I get it. It's fine. Like, I'm bullish on real estate. I love real estate, but you don't have to. But I just need you to understand what the government is doing, because you can't just take verbatim what that is and then just be angry at it. You need to know the rules, the money rules that are being implemented on us, and we need to know how to navigate them so we can win. It's like if you go in to go play a video game, if you don't know how the rules are going to be, you're going to suck. Right? You don't want to suck in the money game that the government has dropped on us. You want to win because you want to be able to provide something to your family or yourself and just be comfortable, right? And this is why the Western world is good. Like, you can afford a middle class. And right now, the middle class is getting wiped out. You're either going to be on the asset side or no asset side. And that is escalating and accelerating like crazy because of all the things that are happening that I described in this podcast. So do with what you want with this information I've provided to you. Again, if you do want to book a call regarding real estate, because that's what our business is, we hope that we provided you with enough information and you want to work with us, the link is on the screen. But for everyone else, if you don't like real estate, just do something with your money, please, right? Because the money's not going anywhere. And if you're on the real estate side, just think about what all this demand side is doing. They're not going to affect it ultimately way too much. So hopefully this was somewhat digestible for you. I know maybe I went off on a tangent on some things, but I really just want to kind of get that information out to you. So until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.